All right, good morning. Everyone going well? All right, guys. I'm starting this session a bit earlier this morning, as I will be out most of the day. Should be back for the close, but not sure 100%. Um, yeah, that's kind of the last 2 days. So yesterday and today, kind of no man's land. Unfortunately, if you're looking to buy here, maybe it work, but you're asking for trouble over the long term if you get used to buy at these levels, right? So obviously we have some very constructive action. Um, let's just use the cues. Not what I wanted to do. This one. All right. So uh, that's the 2 ATR extension from the 21 EMA. All right. I like to use that extension to essentially just tell me where and when the market is overheated. Uh, Obviously, if the new trend is starting, we're really early. But it doesn't mean that you buy at any point in that trend, right? You want to buy right. You want to not be shaken out of new positions. And what happens if you buy extended is, as swing traders, we tend to use pretty small stop loss distances. So chances are that we will be stopped. So that's what you want to try to incorporate in your process, in your system, is to be more aware of when price is extended from short term, mid term, long term moving averages. You pick your horse, but you stick to it, right? So for me, it's the 21 EMA. And usually in any trend, when we get up to 2 ATR from the 21 EMA, uh, we kind of get extended a bit and not mean that we roll over, the trend is done. It simply means that usually the market needs some time to digest, to pull back a bit closer to the 21 EMA. Look what happened here. And that's from April, right? That was a crazy strong power trend. And even then, at 2 times ATR from the 21 EMA, that was good spot to at least stop engaging, stop opening new exposure, just chill and wait for the proper extension and the proper digestion to happen before engaging. Sometimes you get those kind of grind up type of trend, but again, usually when you hit those 2 hour extension, you're pretty near to some kind of stress test of sideways action, of pullback to the 21 EMA, you name it. And when it happens later in the trend, then you can get deeper and deeper pullback as volatility picks up. You get those longer term traders and investors that pick the low and pick good spots that want to start deleveraging, start to sell into strength, and that's what creates those bigger pullback, right? As we mature into the trend. So I'm not saying that we pull back right away to the 21 EMA, but that kind of extension is not extreme, but we're now at 2.65 times ATR from the 21 EMA. So that's why I shared last night in the Prime report that maybe a 616 kind of base back test would make sense. That would relieve some extension from the market, relieve some heat, and just cool off a bit, which will be a good thing. Um, so that's price. We also have that big 635 all-time high kind of base top area that if we really want to continue in lockout and strength to continue today, that could be an area to watch for some supply, for some resistance, and that could spark some selling, profit taking, for finally digesting that move from last week. Uh, but don't get me wrong, the trend is there, the trend is strong. It's just a matter of recognizing where and when the risk reward is the best to engage. And right now it's not, right? Just because of that extension. So if you don't have the exposure that you want, then I think that's a very, very good idea to at least wait for price to come closer below 1 ATR from the 21 EMA at least, and to see that kind of red open being bought, showing oops reversal, or at least retesting a big level like the 616 on the Qs, and start to see the buyers coming in and defending that level. That's the spot that you want to engage and have the best risk reward. All right. Um, so that's price wise. And again, I'll try to be a bit more concise this morning. I have to run away after the session. So QQQE, we covered that yesterday. We had that perfect textbook 21 DME structure reclaim and back tests. So really, if you look at the Qs, if you look at QQQE, which is the equal weight ETF, you really see that there's a big component of that move in SPY in the Qs that is tied to mega caps. All right, mega caps have done very well from the lows. Is it short covering? I don't know, but the Qs is healthy. So outside mega caps, so that's a good thing. We had that daily reversal, and yesterday was follow through with a new local high. So price trend on QQE is there as well, is alive and well, constructive, um, and we're starting to trend above the rising 21 day structure. And that's what we want. All right, QQE is a bit less extended. So the thing that you can start to see is a bit of decoupling between the mega caps. If the mega caps come in a bit, they are very extended. If you look at some names, that can create pressure on SPY, on the Qs. But if you see breadth keeping strong, it means that the broader tech, broader market is seeing that rotation. All right, you see that rotation from the mega caps or maybe the semiconductors that has been very, very strong in the last few days, and you get that rotation back into photonics, back into space group that is setting up, back into maybe I don't know um, uh, stuff like ionic, quantum computing, etc., etc. Those are trying to turn the corner as well. Maybe the data centers, maybe the crypto stuff. All right, that's kind of the that's what you want to assess during a trend as well. Some things will push off, show a lot of momentum, be extended, and while they digest, they cool off. Then you see that money rotate into other groups that are trying to set up, and that rotation, that healthy rotation, keeps that trend alive. That's not a problem. That's constructive to see that internal rotation. All right. Breadth wise, so McClellan summation is trying to get off oversold. Uh, it's now standing at minus 0.95. So just out of oversold, still trending above the rising 10 DMA. And obviously, we have a lot of runway if that trend wants to continue. Overbought will be around one standard deviation and above, right? So obviously a lot of room, even on the bread extensions as well. The stocks above their 50, 21, and 5 DMA. Still not overbought after that we cooled off a bit in the last few days. There's a nice expansion of net new highs as well, about to reclaim the 50 DMA on the summation. So that's a typical correction and an uptrend attempt. All right, an uptrend attempt is exactly the signal that we get on TLMM for the last 2 days. So we started with a rally last week for 3 days. Now that short-term moving averages are catching up to the long-term moving averages, we're getting that uptrend attempt. And when everything will be aligned with the net new highs above their 50 DMA as well, then we have that green light. That usually happens when the market is extended. So the first uptrend signal is rarely buyable. And again, just wait for price to come in a bit and not be so extended from the 21 EMA. Internals. Well, not the good one. All right, so so looking very good on that front as well. Credit spreads, which gave the signal last week. In the last few days, what we had was a nice bear flag into declining 21-day structure. That was very constructive. Yesterday, we broke that flag to the downside. So we're reconfirming the downtrend below a declining 21-day structure. We could see some stress tests retesting previous low. That's always an area to watch. And that's what we seems to have this morning at the open anyway. But as long as we remain in a downtrend below declining structure, that's a good risk on indicator. All right. VIX, same thing, trending lower below a declining 21-day structure, all good. Bitcoin starting to trend and holding that stage 1 base area, but trending above a rising 21-day structure. That's what you want to see. And finally, we might have a trend with Bitcoin participation. It's been a while since we've seen Bitcoin do well, right? So really started to crack like last October with that new high. And since then, it's been a pretty hard downtrend. And yeah, tech outperforming staples and defensive sector. That's what you want to see. As long as we are trending above a rising 21-day structure, it means that our basket of stocks, tech stocks, growth stocks, are doing well. All right, and what I shared yesterday as well in the report and in the video, and this is very important at this point. What I'm reviewing market-wise, and I'm not trying to overcomplicate things, right? I have 4 points that each morning I want to remind myself before engaging in the session, all right? Price. Is price above a rising 21-day structure? And is it extended? All right? Is it extended will dictate if I'm looking to buy new exposure or not, or trim a bit more if we have really, really extreme extension. 2, is breadth expanding? Are we in a breadth expansion regime? and it's shown by the McClellan summation in an uptrend above a rising 10 DMA. Right now, we have that one as well. 3. Market internals. Is the institution and overall market participant are looking to increase risk assets or decrease and be in a defensive and risk off uh, mentality and regime. All right. And right now we have the credit spreads, VIX, Bitcoin, and rotation showing all risk on regime. And finally, how my positions and the liquid leaders are doing. That's huge feedback. All right. That fourth one is very important. And just by looking at my positions, I can assess that. All right. So just quickly, right? BE, 24% move. EP, there was a news. All right. Closed dead high. That's super constructive. Can it Can it pull back? Yeah, of course, but I have a lot of cushion. All right, the 21 day structure is super far. That's what I'm trailing. So I'm super patient. Even if it handles for 2 weeks and not going higher from here, I'm all good. I will be patient. I'm on my core position. Sats confirmed the daily reversal yesterday, acting super constructively. Micron nearly 10% move. We're right up against that uh, base and high recent swing high. So maybe we get some supply today, and that's why I trimmed into strength, even if not at 2R yesterday. Nebius straight off the lows. I mean, this can certainly pull back 10, 12, 15%, and it's still constructive. And I will be patient with this name as it start to maybe flag a bit and digest that move. TER started to flag, and that's what we discussed yesterday. Those names that were really strong from uh, the correction low, they might need to flag, and that's the same thing you see in TER. That's the same thing you see in Caterpillar. That's the same thing that you see in GLW, in GEV. All right, all those names were due and still probably due to some flagging, pullback, etc., etc. VRT is one that is stronger a bit than the others, but I'm on my core on these names, and just because they flag around the highs is not a sell signal. It's just a signal to be patient, to let them breathe. There's there's normal action within an uptrend. If you sell every time that your stocks pull back 2, 3, 5, 7%, and you have, I don't know, 15% or 20% cushion, it will be impossible to catch the market cycle with good size or a multi-bagger move in individual stocks with size as well. You need to be patient and let them breathe, let them live above the rising 21 day structure. TPR flagging, retesting the 21 day structure. It's doing nothing wrong. It's not pushing, not showing a lot of leadership. So at the end of the week, if it's still sideways, I might cut it. But so far, it's still holding and the setup is still valid. So I'm not in a rush to really cut it. ARM, nice follow through, was weak a bit yesterday, but still acting right as it's moving up the right side. Kava, super strong yesterday, confirmed a daily reversal of that higher low in the 21 day structure with a small mini undercut and rally as well. If we look at that April 9 being undercut 2 days ago, and then yesterday confirmed the undercut and rally and reversal. XYZ, so nice follow through on the daily reversal yesterday. So I'm still not their risk on this one, and we'll look to get some strength to get to my 2R and take some profits. And finally, Bitcoin, EBIT, trying to start that new trend. We're right into supply, so it's normal to get that fading action. So let's see how it reacts to that retest of the base area. But so far, it's trying to trend above the rising 21-day structure. So no rush to and just being patient with that position. All right. And finally, stock list. I keep a stock list just because I want to stay true to my process. But to be honest, like I said, I wouldn't look to really engage today. Uh, that's me. If you have good weakness today and you still have good spots in groups that are trying to uh, take back leadership and showed strength in the last few days, then maybe you can try with smaller size and tight stops. But I would not look to increase a lot of new exposure. You want to keep, again, we discussed that yesterday, but you want to keep your open eat, not open eat, open position, so your core positions and your new positions balance. All right, you want at some point when we mature a bit in the trend, you want to keep your core exposure a lot larger and with much more cushion than you take on your new exposure. All right, you want to take that core as your big cushion, and your new position are smaller, fewer, smaller risk, and you take your cushion from your core exposure to allow yourself to finance that risk in the new positions. Uh, that's the way I see it, at least. So, a couple names that might be setting up. So, I think that Photonics still look very good as a leadership group. We had some weakness yesterday, but again, I think it was rotation. Uh, that group was super, super strong during that correction, ran hard last week. Uh, and as you see on light, it's been 3 days of sideways action, pull back, super controlled, back to the top of the 21-day structure. And we see the same thing in GW, in CN, all those names, core, etc., they just need some time to digest, and they might set up again. And when the market gets some weakness, maybe we see some rotation back into that group, which decoupled a lot even during red days during that correction. Um, Planet Labs still setting up potential undercut and rally right into the 21 DME structure. That name still looking good. You have Hewlett Packard trying to establish a higher low at the rising 21 DME structure. And Rocket Lab, a bit of a lagging name uh, in the group. So I would focus on PL, but Rocket Lab still trying to reclaim its 21 DME structure. So if that's a name that you like the story, you like the name, it was still a very, very big leader in the last cycle. So maybe it can start to lead again and just a bit slower to turn the corner. But usually leaders lead in uh, laggards, even if they were big leaders before and prior, uh, they might not lead. Leadership changes, and that's why we need to use the proper tools to get good relative strength ranking. All right, and that's what we use in TradersLab. So again, guys, just to recap a bit, we talked about 4 points, right? Price action on the Qs, extended 2.65 ETR from the 21 EMA, not a good risk reward spot to engage. a bit less on QQQE, so maybe the mega caps are just stretching the major indices a bit more. But still, if the mega caps are coming in, you will feel that pressure even in QQQE in the broader tech. Uh, Second, breadth. So breadth is expanding. McClellan summation is in an uptrend above a rising 10 DMA. Sorry. Internals, credit spreads, VIX, Bitcoin, uh, all below a declining 21 day structure. Not for Bitcoin, sorry, that's the inverse. But credit spreads, VIX, trending below declining 21 day structure. Risk on, all right? You want to assess that. Uh, and own positions and liquid leaders, everything is looking good, constructive. Might need a bit of flagging, sideways action, digestion, and cool off. But that goes with number one, price being extended at 2.65 ETR from the 21 EMA. So the picture is that the trend is shaping well, the trend is strong, but extended. So if you have exposure, if you have good cushion like me, then it's time to be patient. All right, even if we have weakness, the cushion is there to weather that, to give you that patience to, even if you draw on a few percent from here, that's accounted for in your system, in your open eat. And if you're looking to open new exposure and you don't have that cushion, then good risk reward is not here. Wait for the market to come in a bit closer to the 21 EMA. All right, so I will stop here because I have to leave. Uh, but yeah, I'll try to be back for the close. Otherwise, I think that's anyway a good day to sit out, to wait and see how the market wants to digest. Um, and maybe in the next few days, we'll have a much better risk reward spot to either open new exposure for those that don't have, or maybe get a bit more aggressive on margin for me. We'll see how the market shapes up. All right. So have a good day, everyone. Take care, and see you later a bit in the day. All right. Cheers. Bye bye.